Well, what's going on, guys? Welcome back for another episode here of Let It Grow Investing. I'm Jeff. Thank you very much for stopping by. We're going to talk all the stock news that we need to know this week and cover some blunders that I didn't want to happen, but they happened. And now I have to deal with some, I guess, good problems. I'll say it like that. Not even first world problems, but just making too much money in too short of a time. So we'll cover that as well. So thank you guys for stopping in. We're going to talk about the massive run up in Micron, the massive run up in AMD. We've got a lot of these stocks in AI chip space. We're looking at SanDisk that just keeps moving up. There's so many big players for AI that we really need to get a feel for what we want to do in this market. So I want to talk a little bit about the picks and shovels of AI. I want to talk about the companies that might not just be directly in your radar. Some of them are going to be. I did a quick little chat GPT AI picks and shovels type questionnaire, a little prompt, and threw that in there. So what I got back, and I'm going to see where maybe we have some stocks that we like that are not right in the mix on what chat GPT says. So we're going to kind of go between those two. We're going to cover my big mistake from Friday, and I will say that I've been probably a lot preoccupied after AMD went up again on earnings. I remember, if you guys remember, I had that covered call at 70. That was last week's news. And then AMD just blew through those numbers. I mean, it wasn't even a stop sign. It was just green lights, and we're just rolling up higher. So yeah, let me get pulled up into my E-Trade. We're going to take a look at just what happened, what I did wrong, some things to avoid. And we're going to go from there. So the problem of the day is that I ended up selling 200 shares of AMD kind of by accident, and at 400 and I sold it at $450. So I've got 90 some $1,000 in my account now that I didn't want to have. I told you guys it was my largest position. I'm not gatekeeping that information. I had 296 shares, and it was probably around $130,000, give or take. So now I'm down to 96 shares. So I had sold a covered call, and that was at 450. I also sold a covered call on Micron, and I believe that was at 750. So yeah, we've got a couple different things to take a look at here. They changed the format, so let's see just what's going on. Let's see what happened. We are looking at AMD. So again, I could have closed this position on this covered call. Actually, no, that was on Micron, but I could have closed this one on Thursday or even Friday morning much cheaper. I looked at this, it was like 409. I'm like, good, I don't have to close my position. And then the end of the day got hectic for me. I was running here, there, everywhere, trying to get some stuff caught up on from work, from being rained out for Wednesday, which is actually when I started this position, this covered call, because I had time, because I was sitting at a computer. I was rained out, and I'm like, how can I make a couple dollars today, right? So I did. I sold the covered calls. I got like $450 between AMD and Micron to, potentially go up like another 15% in 2 days. Well, it's not going to happen. We're safe here, right? Well, AMD had already gone up. They kind of came back down. You can see it on the 5-day here. If we pull up the 5-day, so you can see I still got 43.6 of AMD left. It was probably around Wednesday, and then we got down into the 410 range, right? And I was like, I'm fine. I don't need to sell or close this covered call. But what are the odds that it goes up 46 points on Friday, right? I did not think this was going to happen. So what I did, instead of buying the option back to close it, I sold another one to open. So instead of just having the one covered call open, had opened another at the same price instead of buying it back to close the position. It happens. I've made mistakes before. It's something that kind of happens when you're trading, and a lot of times you just want to double check, triple check. Well, I didn't have time. I was actually in the middle of a job. I looked at it briefly, and I said, I got to do something. So I thought I did it right. Obviously, I thought I did it right. I did one of them right. I closed Micron fine. And if I didn't, that would have been another $75,000 of sales that I wasn't looking to sell. Now I've got the problem of what to do with this money, how much to put away for taxes, where do I want to put that, where am I going to reinvest? I'm not too sure yet. I really was not looking to do this, and I was going to buy my way out of it by buying the option back to close it. So now I got to figure out, well, what's a good amount of AMD to have? Right now, I think it's about 4% or something like that in my portfolio. So now I got to figure out what I want to do with it. I'd like to have more. I didn't want to sell all this, but now I know I can't buy it all back because I'm still going to have a tax bill on top of this. So I'm thinking maybe $15,000, $20,000 of AMD, see what it does, see if it comes back in. But again, I still think that this can be $1,000 stock by, 2028, 2030. So I want to be in this position. Do I like the amount that I have? I'm comfortable with that. I could probably put some other capital elsewhere. And that's what made me think, hey, what are the other picks and shovel plays of AI, right? So that's kind of what I started looking at. Well, here we go. We've got some different picks and shovels plays. Semiconductors being the obvious backbone, right? We all have talked about this. We've talked about Nvidia, which I still think is a buy. AMD, Broadcom, I still like. Taiwan Semi, not a whole U.S. company. I think they're going to be building some manufacturing facilities here, but that's not necessarily just a straight U.S. play. Micron is much more of a straight U.S. play. ASML, they're going to be the ones making the equipment to make all the chips, right? I believe that's what they do. So again, they're going to be not US company based. So I don't know that I really want to get into them. So Nvidia, AMD, Broadcom, and Micron, I already own a good amount of. So I'm not really looking to be there anymore, right? Maybe, like I said, maybe get some more AMD back, maybe buy a little bit more Nvidia. Broadcom, I still like, right? But I'm not really chasing these names because my position is already really, really full. So then that gets you down to data center, right? We talked about some of these names. We talked about SMCI. Arista has been really doing well. Vertiv, cooling and power. If you don't have the power to run the engines to get the cars down the road, you can't move the AI, right? So we need all of the industrial side of things as well to move this business along. GEV, we've talked about that one. That one still doesn't really strike the chord for me yet as to one that I want to buy in at some of these prices. So that's not necessarily something that is a screaming buy to me. But data center is certainly a great area to be in, right? So we're looking at a lot of that. Arista, I was hearing a lot of people talk about Arista this week. So I do want to take a quick look over here. We're going to look at ANET. That's the ticker there, Arista Networks. I do not have any of this. I haven't really looked at it before. We have come down on the 5-day. Analyst research, helps to get a little bit of feel for where some of these analysts think that this thing can go. We still got around 33% of upside. That's pretty decent. AMD, we're probably pretty well capped out or negative at this point. And if we look back to, into March, beginning of April, we probably had 40% of upside. It wasn't that long ago where we had a significant amount of upside. I mean, you see where we were. This was March 7th. We were at $200. And now 2 months later, we've over doubled that. Was I playing with a little bit of fire with covered calls on AMD? Yeah, I was. But the fact that it had already gone up so significantly after earnings, I kind of thought, you know what? I don't know that it's going to have the legs to have another 11% day, so I thought I was safe. Again, double check your work, right? Make sure you're setting the right type of order for what you want. I knew better. I didn't check, and then I realized Saturday morning what had happened. I was like, 90. Like I couldn't even wrap my head around the valuation because AMD was at 450 and Micron was at 750, and there was no way that those two numbers could equal the amount of cash that was in my account. So I really had to look, and then I realized what I did, and I'm like, oh man. And then I just, lie awake sitting there like, oh, what did I do? Why did I do it? But again, it's a first world problem to have. I'm really not a huge problem. It's just a tax problem. That is all it is at this point in time. And if it runs to 600 tomorrow, maybe I'll be sad. But at the same point, if it went to 300, well, that gives me a great entry point. So it makes me look like a genius, and I can buy those shares back and then, still be able to pay the tax man. So it is what it is. I don't want to cry up a tree about making money, but at the same point, it wasn't what I intended to do. So make sure you're checking your orders, making sure that what you're setting is what you want. and go from there. That's all I can say. I hope you guys learned something from my mistakes about double checking what you're doing and probably not being preoccupied when you're doing it, when you're playing with large numbers. It's a recipe for disaster, I'll just say. So AMD, I still really like it. I'm still very much a fan. I still think that it could have a lot of room to run. But at this point, I do see significant downside risk. I don't see it going back down to 250. I think that is just old news at this point. And I think anyone that has come out on this thing in the last week is not saying this is a $250 stock, right? We got a 520, a 358, a 505, a 500, 320, 455, 485, 450. And I'm sure we'd have to go back a couple pages to get to the point where this thing says, hey, this is going to be a $250 stock, because anyone that's watched these earnings knows how much of demand there is on AMD chips, on Micron, on any high bandwidth memory. It is just through the roof right now. And that is why all these companies are getting all these upgrades, and the shares are going just parabolic and going to the moon, right? A lot of different things there. I do want to check in on SanDisk. DK. So let's take a look here real quick, because this thing has had significant upside as well. We were at 1562. And man, I forget the amount of growth, but I mean, someone was saying that this thing made you a millionaire from 10,000 like in a year. I mean, it was like insane, the amount of growth, right? So yeah, I guess if you were at $41 last year and you put in 10 grand and now it's at 1562, you did okay. You did okay, guys. I mean, I didn't do that. I did not call that one. I'm not even going to pretend that I did, but a lot of the money's already been made here as well. So I know that there's a long runway. I don't want you to chase it. And I do want more AMD, and I'm not really trying to chase it. But I also, at the same point, I just sold at this price point, and I didn't mean to. So I'm going to try to get back in where I was. And if I can average in lower, I'm going to. So we got data center infrastructure. We've talked about power and energy. I talked about CEG. The fact that they do nuclear. I've said NextEra Energy, that is a holding in the Let It Grow investing challenge portfolio for a lot of reasons, that they're a utility, but they have a compound annual growth rate in the mid-teens compared to other energy or utility companies that are in the mid higher single digits. I'm looking at Dominion. I'm looking at Duke Energy. I'm looking at some of those, right? So I still like NextEra, and GE Vernova is still on this list. Networking and connectivity, we still got a lot of the same names, right? Broadcom, Marvell, we've talked about them before. We've talked about Cisco. I haven't held them for a long while. Picks and shovels plays. We have talked about Cadence. I do have Cadence in a couple portfolios. Not a ton of money there. Palantir, I still really, really like Palantir, and the amount of adoption and growth that they've had. While some of the numbers look rich, it is still a company that I believe you could buy, hold on to long term. We've got hidden industrial plays, very underrated. Gold Rush shovel sellers, right? So Caterpillar, Hubble, I'm not even sure what they are, and MCore. CapEx build out, not necessarily AI success itself, right? Caterpillar isn't going to be an AI company. Maybe they use some AI, but they're not an AI company. So all these data centers that need to get built, they need to excavate dirt or whatever they got to do to level it to get things in order to build these centers. So whether it's excavators pouring foundations or setting foundations, or laser levels to make sure that everything is nice and straight and nice base for these buildings, Caterpillar can benefit. Caterpillar I've owned. It's probably the first stock that I bought some like 10, 11 years ago at this point. And it's done really, really well for me. I think it was in the $70 range at that point in time. And now it's probably $9, $10, something like that. Sorry, guys. These are some different things that we're looking at, right? We're looking at Synopsys, Cadence Design, which is CNDS or CDNS. I forget. I'd have to take a look. Cadence, CDNS. Let me take a look on this other page over here. Yeah, CDNS. Another one that designs a lot of the AI systems that things are going to be running on. So a lot of things there, right? Early cycle, it says chips are going to dominate NVIDIA, AMD. We're looking at mid-cycle infrastructure bottlenecks, and then late cycle, we're going to be looking at software. Software has been a very weak area. We're still looking at ServiceNow. I still like security. These names are not on the list. So when I'm looking at that, where do I want to be? CrowdStrike is still my number one that I would look at for cybersecurity. And yeah, I mean, we sold out of this one probably 2 years ago from some of those big data breaches that they had. And it went from 380 down to 240, right? That was the low. Somewhere in this mix, probably around 3.25, I believe I sold out of this. If I would have held, I would have been doing okay. But I put that money in other stocks that did better. So there's that, right? I could have held CrowdStrike and we would be up significantly. But again, when you look at Micron or you look at AMD or NVIDIA, other names, right? Those have done really, really well also. Now, when I'm looking at cybersecurity, Zscaler also comes to mind. ZS is another one that I would look to buy. 5-year, we don't have that great of stock price appreciation. So I still think that this thing could be a buy. You have around 48% of upside. It really hasn't gotten away from us. Some of these things could still be on the list of things to get into. Salesforce, they are leaning more into AI, but they're not a direct AI play. But you do have some upside in some of these security names, or not security, in these AI companies that are going to be leaning heavily into it. So Salesforce, I still like. Oracle still makes sense to me as well. You got around 25% of upside there. And then a lot of the companies that they didn't really mention on ChatGPT are cloud companies. And I was struggling to come up with Microsoft Azure last week. That was then the one of the things that I was trying to say about Microsoft, and I could not find the words to come up with Azure. We've got around 35% of my upside on Microsoft as well. I still like them. Beginning of the year, Microsoft was 473 on January 2nd when we did our first episode of the year. 473. I got it written down on a sticky note right on my other computer monitor here, and I kind of glance off to the side to see just where everything was. And AMD was at 227 on the 2nd. Of January, and now we've doubled that. So when I look at CrowdStrike, I'm like, yeah, it's up a couple $100 in a year and a half or 2 years. And I look at AMD and say, oh, it doubled since then. I'm like, okay, things could be worse. We could have done a little bit worse there. So yes, Microsoft, Azure, Google Cloud. We've got AWS, Amazon Web Services. They are all great stocks that I think are going to just keep continuing to run away with some of this, the market share of cloud, right? So Google's there, not as much upside. Microsoft has more upside. Google has been firing on all cylinders. A lot of people were selling this thing off because they thought ChatGPT was going to destroy search. Well, that hasn't happened, and they make hundreds of $millions a day on search, and that number in itself blew my mind. I'm gonna Google that as to how much revenue does Google search make daily? And if I go ahead and share this, they make $615 million per day, right? That is insane. And it drives the majority of Alphabet's $400 billion annual revenue. That is absolutely insane that a company can make that in a given day off of search, right? So that money, if it goes away and ChatGPT were able to take that, man, that's a crushing blow to Google, but they are still the big dog on the porch when it comes to search. I think they are going to continue to generate a lot of money from Google Cloud. And I still think that Amazon is going to continue to get in there. So Amazon, Google, and Microsoft are going to be some of the big three there. I like all of them. I have been buying Amazon. I've been buying a little bit of Microsoft. I haven't really bought any Google. So if I look at Amazon, we still got around 16% of upside. And like I said, Google's fairly limited. Microsoft has more upside. Now, that kind of gets you into different areas of AI, not simply just buying, so-and-so.ai, C3.ai, or whatever, right? I'm not saying that those are bad. I'm saying that there are other ways to play it, simply from other companies that don't make the large language models or whatever they're doing with it, or integrating it, or having more and more bots on a platform. I'm saying the ones that are necessary in order to make all of these functions run might be the way that makes more money, the picks and shovels of AI, rather than simply just the AI itself. They still got to get those on databases. They need them on servers. They need it here, there, and everywhere. How do we get it? How does it operate? How does it run? What drives it? What takes it down the street? And all those things in between. So there's a lot of different ways to play AI. I'm looking at some of these. I still think that the energy piece is huge. And a lot of people haven't really realized how much energy it takes in order to run all of this large language models, all the AI, all the data centers, and everything else. So there's a lot of different ways you can play it. And these are just some of the ones that I thought about. Excuse me there. We've got, we're looking at the investing challenge. And now I'm still back into where do I want to be spending our money or investing our money when it comes to the investing challenge portfolio, right? So I still am buying Nike. I still like NKE. And like I said last time, people say, well, the younger generation isn't buying Nike. Well, the younger generation and like my kids, they don't have the cash flow yet. But when they do, I still see all of them wearing Nike, wanting Nike or Adidas or on the soccer field for sure. And a little bit of Under Armour, but we're in Baltimore, so that's probably a little bit skewed. So yeah, there's a lot of different things out there that say, oh well, On Holdings is doing better, or Brooks, or Hoka, or who I forget who the parent company of those are. But there's a lot of people pointing to those that they're running away with it. I still think that Nike makes sense. You got a good amount of upside. You've got a solid dividend. I don't know that it's going to just come crashing down much more than where it already is. I think that they start to right the ship and we get things back on track. So I still like that. SoFi, I've told you guys that under 17, I really think that this is a good buy. You got around 34% of upside. We've talked about Salesforce, looked at Adobe. Adobe still worries me in the software space. I don't know the turnaround on that. We got around 25% of upside there. Nvidia, I still really, really like. I think there's probably more of upside. Yeah, I was going to say there's got to be more upside in Nvidia because AMD has run so much that Nvidia's entry point here makes more sense. They went up a little bit on Friday, but not what SanDisk did, not what AMD did, not what Micron did. So Nvidia still looks attractive to me here. There is very limited on the downside, right? Even on the low end of the price targets, you still have around 2% of upside, average being 27. High price point, you got around 77% of growth in the next 12 months. So I still like that. Like Microsoft, we talked Amazon. I still like Celsius. I've been buying that, and that is actually cheaper than where we started the year. We're at 32. The start of the year was at 48. We got a lot of upside here. I still don't know why it hasn't really run so much. I don't know if it's fear of the economy, if it's trucking, if it's delivery, what it is, but these prices have gone way down. Another thing, I don't know if I covered last week or if it was news from this week, but UPS, they were kind of shaking in their boots there for a couple days because Amazon announced that they are going to open their logistics centers to other companies. So other companies can potentially ship through Amazon. And that had UPS just spiraling. It was a rough day. If I look at the snapshot and we take a look at the 5 day, I want to say it was maybe a 5 day. Nope, it was probably last week then. So, or maybe it wasn't. Maybe this was already some of it cooked in here. Yeah, we went from 108 down to 96. That was a pretty massive drop here for UPS. We're starting to level back off, but yeah, I mean, that is scary to know that Amazon's entering in your business and they're not just shipping their own stuff anymore. I get it, man. That's very fearful. I'm like, yeah, this 6.5% dividend's pretty cool. But if Amazon's in there, I don't know. That's maybe not the spot you want to be. So I don't know what this looks like going forward. I can definitely take a look. I mean, the PE on trailing 12 is fine, but we're fighting the Amazon problem now. We're fighting rising fuel costs and some sticky contracts. I'm sure that they're in for how much it's going to cost for some of these different producers to ship through UPS. I'm sure a lot of it's some contract based in there. I don't know how much they fluctuated, if they're going to be shipping with them monthly, weekly, daily. I'm not too sure. So I'm sure there's some of that. I'm sure, yes, we're going to pay more as consumers. But I don't know the business side and how those are shipping agreements are set up. So that would be something to take a look into as well. But I do like 6.5% dividend yields. That is fun, but it depends at what risk, right? What risk is there that we're willing to get a 6.5% dividend? So again, I mean, I've been looking at SoFi, I've been looking at Celsius. Microsoft makes a lot of sense. A lot of these names make sense. I think I want to buy some more SoFi, though. I think that's probably a good way to go. I think this one has been oversold and not really justifiably so as to why it's gone down so much. So if I look at this thing year to date, we will see that this was a $27 stock near the beginning, $29 stock at the beginning of the year. We were at 32.73 November 12th. That was the high, and I think we can get back up into the mid to upper 20s in fairly short order. I don't really understand the massive sell-off that has been in SoFi Technologies. I can, hey, let's use some technology and let's see what some of these other AI platforms say. Why? Let's share this one. Is SoFi stock down? Brief. I can't type. Brief. Sorry. Mind my typing skills. I'm also trying to type around a mic. Why is it down so much? SoFi kept full year outlook the same instead of raising it. That was based on planning for 2 rate cuts. I remember Noto said. Market expected more. Strong growth, plus some segments, Platform and Galileo, and near-term outlook were weaker than expected. Sell the news. Even with record revenue and profits, investors focus on future growth signals, not past results. That could change, right? We could to get a new Fed chair in there, and we could have this kind of reverse course. I'm not too sure. I don't know what the agreement is there. I don't know how pressured he is by Trump to cut rates. I'm sure there's some of that, right? I'm sure of that, but he's got to know that Trump wants him in there to cut rates. Short seller concerns, so there's probably a lot of short interest. Fintech sector weakness, prior high valuation, mainly because expectations were too high versus forward outlook, not because of business collapse. And at that, they did not raise guidance, but they kept it in the same kind of target as before, and that was based on 2 expected rate cuts, and we didn't get them. So I still think that SoFi is a good buy here. I don't know that it really makes sense that it sold off so much, and the business is still there. Some of the numbers might have not been as hot. Overall, we were still in a great area, had record revenue and profits. So the growth is not hateful. It really isn't. So I think that that's going to be where I'm going to go for the investing challenge. For this week, that account continues to grow. I got to figure out what I'm doing with AMD. I'm going to try to buy some back, but it is what it is. I'm, didn't make the best call. Maybe not even the best call. I made the improper purchase, as I said, not to, stir that pot up any much more than what we already have. I want to see if the futures market is open, but that's going to kick me out over here. So let's go back to this one real quick. Futures, if it is, it's flat. It doesn't look like too much. So I'm not seeing too much there that's showing me anything. I still like Tesla. No, real quick while I got you here. Rising fuel prices mean more people want to save on fuel, right? So I do think that Tesla could be a kind of silent winner right now. It's gone up fairly significantly. It was up 4% on Friday. We've got a stock that is on the 3-month. They were down to 343 and now they're up to 428. They have definitely made a comeback, and it's been kind of quiet because everyone's been worried about AI, about chips, about data centers, about all the things AI. And Tesla's been kind of quietly executing. And I think a lot of that is on the fact of oil is so hot and so high that Tesla is kind of winning, right? Now, I don't know, based on a lot of the numbers, that it is a screaming buy. I still think if you look out 10 years, you're fine. But right now, some of their numbers don't look too hot. Now, it looks like they got way ahead of themselves on some of the price earnings multiples and PEG ratios. But it might be something to think about averaging into, or for me to average into a little bit more. I have a okay position, but I could maybe add a couple more shares in there. So maybe I do some of that. So yeah, that's what I got. We're going to be buying SoFi for the investing challenge. I got to figure out what to do with 200 shares of AMD and see how I can't get caught again with some covered calls and then writing the wrong order. I mean, again, it's a first world, not even a first world problem. It's just a problem of having too much cash and selling too much. And now I get hit with the tax bill because of where I was holding the account and how I've got it. So that's what I've got to deal with this week. And then I got to do all the evaluations and get back to everyone and offer spots and do all that fun stuff. So it is going to be a long week. And that didn't even cover what the fact that I've got a full-time day job and company to operate. That's going to be it for me. That's it. I'm signing off. We're going to go get our thoughts together and regroup and rethink about this week and get some stuff done. So thank you guys very much for stopping by. Please like, subscribe, share, do all the things, click all the buttons, and I will catch you guys in the next one. Take care.